Hi, everyone, and welcome to the At the Forefront podcast. I'm Sam Belden, head of content at Forefront Communications. And with me today is Rashad Kurbanov, the chief executive officer at Corastone. Rashad, welcome to At the Forefront.
Thank you.
Good to have you with us today. So, just a little background information for those who may not be aware. Rashad is CEO at Corastone, and Corastone is a firm that provides modern infrastructure that enables straight-through processing for participants in the private markets. Little context here for our viewers: private markets are expanding at a very rapid rate. But the operational and data infrastructure surrounding them has not kept pace. There's a bit of a disconnect between tremendous growth that we're seeing and the operational readiness to support that growth. So today we're going to talk to Rashad about where those challenges show up in terms of scalability, how Cornerstone addresses them, and then stay tuned until the end of the conversation. We'll look into the future a little bit, talk about what the future of private markets could look like if this infrastructure evolution really takes hold. So we'll get to all of that. But first off, Rashad, I gave a little bit of background information, but to set the stage, take us through like what is happening in private markets right now and what is driving those scalability challenges that I know you have a lot to say about.
Yeah, I appreciate the introduction, Sam. It's great to be here. If we think of the private markets, I mean, you cannot look at them in a complete isolation. Private markets are just part of our overall capital markets, financial services infrastructure. And over the last few years, they've started playing particularly important role in kind of moving away from being purely institutional product space into much more retail, high net worth individuals, et cetera. And that's actually not surprising because if you look at kind of the public markets through the years, through mergers and kind of private equity buyouts, et cetera, the number of companies has shrunk. So the public markets became effectively a very large, very efficient beta generation machine, right? So if you want to kind of just get the market returns, you go there, which actually then forced a lot of the investors, particularly in the high net worth and ultra high net worth space, to seek out investment opportunities in the private markets or so-called alternatives, right? Now, so conceptually, that market has grown, and while the statistics are not easy to come by, some estimates are putting the growth of the private or alternative markets in the private wealth to be several trillion dollars worth of invested assets, right, in that space. So it's not a negligible amount, but it's a fraction of kind of the overall market. However, if we look at kind of how that market, that segment of the market operates and compared to the public markets, we realize that there's actually a very stark difference between the investor experience, the advisor experience, the client experience, and everybody else, right? And just to kind of give you an example, like most people today, I mean, there's actually maybe too much of it going on. But in terms of if you want to invest in crypto, if you want to invest in stocks, bonds, options, mutual funds, whatever, it's very easy. Anybody can pull up an app, whatever the app is, and just enter a few keystrokes, and boom, the trade is done. Money debited out of your account, etc. Now, if you switch over into the private markets, the experience is resembles more like buying a house, right? There's a
Mhm.
lot of paperwork that is involved. There's a closing period. There's this. There's that. So ultimately, when you look at it and you say, why can't the private market investing be as easy as the public market investing? I.e., why do I have to jump, or anybody has to jump through all these hoops in order to be able to invest, and not only invest, but also then later on manage that position, you know, uh, withdraw their money, etc. Some of you may have heard, like more recently, they talk about the private credit and the gating in the market, etc. Right? So the major difference between kind of the public markets and the private markets is the presence or absence of what we call the infrastructure, right? Which are the pipes, the technology that kind of sits behind the scenes and makes the machinery run, right? It's not like when you enter, a stock purchase on your app, it's not just that it happens inside the app. There's a whole ecosystem that is behind the brokers, the exchanges, the clearing firms, the banks, that are all integrated around a very specific business process to deliver that seamless experience to the clients. That does not exist in the private markets. And that's exactly what Corestone built. Right? So from Corestone perspective, we look at ourselves as solving the operational challenge of the private market and helping the private market participants to drive down the cost, improve the efficiency, and get to the point where I don't think it will ever be as seamless as in the public markets or trading crypto, right? When you go
Mhm.
into the private markets. However, it does not have to be as complex as it is today, right? So our mission is to just kind of narrow the gap as much as possible and give easier access to this growing segment of the market to a broader audience of investors.
Fantastic. That's a great overview. Appreciate you walking us through that. It seems like there are a couple of like converging factors here. Like not only is the growth and the interest of these markets really exploding, but as you mentioned, like the people, the individuals who are want to access these markets, they're diversifying a lot. It's a lot of like non-industry practitioners who are used to instantaneousness. They're used to flexibility and ease, and it's not always intuitive, like why they can't do things with the same level of seamlessness that they can do just investing in stocks or ETFs. So,
Exactly.
yeah, it's a very interesting landscape here. Tell us a little bit more about how Corastone solves some of the operational challenges specifically.
Yeah, no, absolutely right. And I think like here it probably just makes sense for me to mention the vision behind the course. And we started the company with my co-founder probably about 8 years ago. And right from the beginning, our focus was like, hey, this is the space that we want to be, kind of present and just kind of exist because we need to solve this particular challenge. Um, underlying technology that we chose to use is blockchain, right? So we built our platform on DLT. It's a private permission ledger. So, I don't want to create an impression that, Cornerstone is a play on tokenization, right? We're using a different version of that technology. But what that technology enables us to do is to deliver a platform and a service to our clients that is fundamentally different to the way they operate today. So in today's environment, right, just to kind of dive a little bit more into the detail of what I said just a minute ago, in the public markets, there is a very well established infrastructure that actually enables the organizations to connect to one central hub. And that central hub then is distributes and kind of coordinates the interaction between the various counterparties. In the private market, it does not exist. And when I say that you complete the paperwork and do it like buying a house, it's indeed almost like buying a house because there are multiple parties involved and each one of them communicates with each other, right? So you have files, you have emails, you have Excel spreadsheets. I mean, every which way that organizations communicate. So what we've done with kind of building our DLT infrastructure, we said like, look, that actually is extremely inefficient, right? So the inefficiency increases with the number of nodes into which you need to connect, right? So the more counterparties you need to connect to, the less efficient you become.
Mm.
So the opposite of that is what is the most efficient method? You have just one node into which you can connect, right? So if we take that concept of connecting to multiple nodes versus connecting to one, that's really kind of what Corestone has built. So we built a DLT, right, the distributed ledger, and that ledger then is managed by the individual nodes of our respective clients or organizations, enabling them rather than having to connect to multiple nodes to connect to one,
Mm.
which is their own, and then use the power of the technology to deliver the data, transactions, etc., to all of the counterparties that they need to, right? So automate what is today being done on a point-to-point basis and move to the point where you're like literally just connecting into one place and everything runs. Right. So that's, kind of the fundamental approach. And I know it may sound very wonky, like a lot of people don't even kind of realize the mechanics that exist in the public markets to deliver that. But I'll tell you that in terms of, a very simple metric, cost per trade, right? So cost per trade in the legacy model could sometimes end up being several $100 or maybe even $1,000, right? Of all the operational cost that goes into processing it, we actually drive down the cost per trade 95% down, and then enabling the effectively kind of almost frictionless experience for all the parties to participate. I hope that kind of makes sense, right, Sam? It's
Yeah, no, it does. That ability to sort of connect once and access everyone. I mean, especially when you talk about sort of initial processes, onboarding and due diligence, et cetera. I mean, in order to support the level of growth that you mentioned before, I can imagine that has a tremendous impact on cost per trade, as you said. So,
Yep.
yeah, that.
And the important thing to know, just to kind of add, right? So these days, there's a lot of focus on the privacy, on security, kind of, and access to the private information, particularly of investors, etc. Data has become really important commodity.
Mm.
So connect once, as we said, it doesn't mean take your data, hand it over to one central counterparty, right? And I want to kind of make sure that this is very clear. So we're not actually collecting anybody's data. What we're doing is we're providing an infrastructure through which the data can be intelligently shuttled from one place to another without any one counterparty coming into possession of all the data, right? I think that's an important one to call out because, theoretically, one could make an argument like, put a middleman in the middle that will collect all the data for everybody. But then that basically means the disclosure of all the confidential data. And what the DLT allows us to do is to avoid that setup as well.
That makes a lot of sense. Great. So I know that Corastone offers benefits to multiple different firm types and types of participants in the private markets. I know GPs, distributors, service providers, they all benefit in some way from what you guys have built. Take us through sort of that audience by audience, what the impact is, the efficiencies that you're delivering for each type of firm.
Yeah, it's a great question, Sam. But I think what we probably should do is we should just kind of take one step in front of this chain that you've described.
Mhm.
You know, if we look in the current economy, right, in the US, one I think can very safely say is that the vast majority of like economic activity, value creation happens in the private markets, right? So be that the companies that, like SpaceX that stay in private hands until they reach $1.5 trillion in valuation.
Yeah.
Think of all the data centers that are being built, think of all the kind of real estate, et cetera. So all of that is kind of existing in the private markets. Um, and in order for that economy just to kind of grow and exist there, it needs to have access to capital, right? And this is where, like, the reason why I'm highlighting is like, it's not just for the sake of moving money that the GPs and the wealth managers and the fund administrators exist. That whole mechanics exists to actually provide the capital into this, growing and very capital hungry part of the economy that is just growing very, very fast, right? So when we think of it kind of from that perspective, then really and start to work, right? Who supplies the capital into that space? That's your GPs, that's your asset managers, that's the firms like, KKRs, Apollos, Blackstones, right? Really, really large firms. They have a lot of experience to identify opportunities, make investments, etc. But they are in many ways intermediaries.
Mm.
So what they do is they intermediate between the consumers of the capital, which could be, companies like SpaceX or, a data center being created to support the latest AI models, and the investors. And when we think of the investors, and investors, traditionally have been institutional investors, but more and more private wealth investors are coming into that space. This is where you start to kind of get into the question like, yeah, hey, if I need to service 10,000 or 100,000 investors, now that becomes pretty significant challenge, right? So this is where the technology actually starts to come in. And even though there is a very robust infrastructure with the administrators, et cetera, as long as this servicing is being done using nothing more complicated than an Excel spreadsheet or some sort of a simple database, you have issues and the challenges and the costs.
Right.
So from Corazone's perspective, we kind of look at it and say, look, the important part is the efficiency in flowing the capital and ability for the investors to allocate their investments more broadly and be able to tap into the growth opportunities that today exist in the private markets intermediated by the GPs, we believe is a critical part of, kind of developing the capital market infrastructure, right? I mean, otherwise everybody is literally just, yes, there are some mega caps and they perform very, very well, right? But that's not a way to achieve alpha, kind of overall for your portfolio.
Right. Yeah, no, that makes total sense. I mean, as you sort of touched on, just because companies are staying private for longer, taking longer to reach the public markets, does not mean that the innovation is being delayed in kind. So the demand for accessing these companies at a certain growth stage is going to remain, and it's almost like the private markets as they've existed to date places like an artificial constraint on
Yeah.
access to that innovation, ability to benefit from it. So you've described the problem very well, I think.
Yeah,
Um,
and it's not just companies, but also the infrastructure, right? I mean, I don't want to necessarily kind of neglect I mean, there is a tremendous amount of capital that goes into building out of the data centers, of all of the electrical grid, right? So there's a lot. Those are very capital intensive parts of the economy, and being to able to efficiently deliver capital and then realize the returns on that and return back that capital to the investors is a critical part of making the economic machine work.
Great. Yeah, makes sense. So looking ahead, if let's say 5 years from now, if the private market infrastructure evolves to the point that you believe it needs to in order to support the growth and scale that it needs to. Um, what do the private markets look like? What does the landscape look like? Where are we going to be if this evolution occurs?
Um, Not to sound like the man with a hammer to whom every problem looks like a nail.
Yeah.
What we believe is that the markets are going to grow independent of whether there's infrastructure or not, right? People will always find a way to kind of achieve certain things, right? So that's not necessarily the question. But let's assume that the infrastructure is actually built out. We believe that the private markets 5 years from now, particularly as it relates to private market segment that is being accessed by the private wealth channel, I think is going to look dramatically different to what it is today, right?
Mm.
So first, I think the ability to invest is going to get significantly simpler. So the complex paperwork and buying a house type of procedures are going to go out the window. And while it's not going to be necessarily always point and click, but it's going to be a much more seamless experience from kind of the investor's perspective. And that seamless experience is going to go beyond just the initial purchases or kind of the investment. It's going to go into even such things as, whether how you withdraw the money, how you transfer, how you trade, and these things that you can actually do with your investments in the private markets. So I think, you know, if I can use this metaphor, 5 years from now, the private markets are going to look much more like its older brother or sister or whatever you want to call it, which is the public markets, right? From
Right.
kind of the ease of access and the diversity of the products that is available. So then the investors will be able to much more intelligently incorporate the private markets for whatever the plans they have, right? Whether they are, early on, and we saw the Department of Labor, putting out the announcement around incorporation of private equity in the 401ks, in retirement plans, or you are more at the kind of tail end of your career and you're looking for income opportunities. Just making all of that available is going to be effectively very efficient from the market's perspective.
Fantastic. And I know that Corastone in particular has seen a lot of momentum lately. I know that you guys are working with a growing number of institutional participants, really seeing some momentum and a lot of interest and action behind your platform lately. Tell us a little bit about some of those milestones and what that means for the interest and momentum around private markets as a whole, in your opinion.
Yeah, absolutely right. So exactly as you said, Sam, we've seen a lot of momentum for the services that Coruscant brings and the kind of our platform. And really, you know, I credit two things to that. One, obviously, is the market dynamics, right? So we're not the ones creating the market. The market is already there. It's growing, whether we exist or not. That's gonna carry on. But I think the second point that is also important to emphasize is that what we bring to our clients, our users, etc., is um, very complementary to what they already have, right? So we always focus our attention is on doing things that no one else wants to do. So, if you think of, I don't know, a housing development, right? Everybody wants to be able to paint their own walls and kind of rearrange the furniture in their own house, but very few are actually focusing on laying out the wires to pass the electricity from the electric gas station or electric station back to the house. So we focus on that infrastructure component that enables our clients then to focus their attention and do things that they do very well, right? And not have to worry about kind of all the operational aspects. So in that sense, we've gone live in November, right after building our platform for quite some time. For a while there were always a question, well, is this technology going to work? Is this technology not going to work, etc. We went live with one of the largest distribution platforms, one of the largest transfer agents, a number of institutional asset managers, GPs on our platform. And today, having proven that the technology works, we are in that rapid acceleration stage, right? Where like, yeah, a lot of folks always told us, like in the prior to us going live, everybody said, look, we don't want to be the first ones, but we would love to be a close second, right?
Mm.
So
Yep.
now that the first ones crossed the finish line, we have a very large, lineup of people that say, "Well, where's my second spot? Like, I'm really kind of getting there." So it's all very exciting, right? I think, and we're proving the value literally every single day by showing how efficiently the trades are flowing, how efficiently the transactions are done, lowering the cost, improving the quality. So yeah, very exciting.
Yeah, no, that's fantastic, and, hopefully you get those close seconds onto the platform soon,
Yep.
and people are soon competing for 8th, ninth, 10th, beyond, so it sounds like there is a tremendous amount of momentum, and to your point, everyone wants to dream about building the big house, the big mansion, and that creates a great market for, some of the wire, that you guys
Yep.
are like, so good stuff there. Rashad, wanna thank you for taking the time to appear on the podcast today. Great conversation around what is driving some of the explosive growth that we're seeing in the private markets and what is required in order for firms to make the most of it. So, if you guys would like to learn more about Corastone, we will include a link to their website in the description. Check out some of the recent milestones and some of the recent insights that they've been publishing on a regular basis. And of course, for more episodes of At the Forefront, head over to forefrontcoms.com, head over to the news and insights section. So, until next time, great conversation with Rashad Kurbanov of Corastone. Rashad, thanks again for coming on the show.